Hey everybody, here is the Chapter 7 self-test. I will walk through it. Please be aware that the self-tests pull from a bigger group of questions, so some of the questions on here may not be on your self-test. Likewise, some of the ones on your self-test may not be on here. So this is just me kind of walking through the self-test it gave me and explaining my answers to each question. Also bear in mind that I don't have an answer key to this, so I miss some sometimes. And so at the very end, I will review the test after I grade it and fix any mistakes I've made. So you may want to, even if you were just looking for a single question, you may want to run to the end of it just to make sure I didn't have any errors. And I don't want to mess you up. Anyway, here we go. Internal controls guarantee the accuracy and reliability of accounting records. That's false. Nothing can guarantee the accuracy and reliability of accounting records because even good people make mistakes sometimes. Number 2, which of the following is not an element of the fraud triangle? We have rationalization, financial pressure, and opportunity. Those are all elements. Segregation of duties is not part of the fraud triangle. It is, however, part of internal control, but the other 3 are the fraud triangle. Which of the following is not a primary component of an internal control system? Risk assessment, information and communication, monitoring, and rationalization. Again, those 3 are all part of internal control. Rationalization is part of the fraud triangle. They're just throwing it in there to mess you up. Number 4, which of the following is a reason why an organization establishes a system for internal controls? Safeguard its assets, increase efficiency, ensure compliance. It does it for all of those reasons, so the answer is D. Number 5, segregation of duties reduces the risk of errors and irregularities. Yes, it does. True. Number 6, collusion occurs when 2 or more people are responsible for a single task. That's false. Collusion is where 2 or more people work together to commit fraud or cheat in some way. So anyway, so that's false. 7, which of the following statements is correct? Control is most effective when 2 or 3 people are given responsibility for the same task. No. The person who has custody of assets should not perform the record keeping for the assets. That's true. The person who has custody of the assets should also perform the record keeping for the assets. No. And it's often a waste of company resources to have an employee perform independent internal verification. You will meet managers who feel that way, and you have to explain to them often as the accountant why it's so important that we have independent internal verification. Number 8, internal auditors. Let's see, they are hired by CPA firms to audit businesses. No, they are employees of the IRS. No, they evaluate the system of internal controls for the companies that employ them. That sounds pretty good. They cannot evaluate the system of internal controls of the company that employs them because they are not independent. That's not true. That being said, we like to have internal auditors and we like to have independent auditors both. The internal ones are the ones that work for us, and they try to find the problems before the external independent auditors find them. All right, which of the following is not a principle of internal control? Segregation of duties, yes. Documentation procedures, yes. Collusion between employees, no, that's a bad thing. That's not part of our internal control. And then bonding of employees, yeah, that's part of control. Number 10, under which of the following do computer programs that limit unauthorized access to certain files fall? Human resource controls, independent internal verification, documentation procedures, or physical controls. This one doesn't seem so obvious to me because I guess I could, in my brain, I could make it fit in a couple places. But to me, this is a physical control. It limits physical access to information that the person shouldn't have access to. This is one I'll be interested to see if we get right when we do the check. Number 11, which of the following is obtaining insurance protection against dishonest employees? An example. So that would be like bonding, right? That's what insurance protection is. So this, well, I guess they're calling it bonding. 12, reasonable assurance rests on the premise that the cost of establishing control should not exceed their expected benefit. Bonding will prevent employees from stealing. Employees are basically honest people. or a system of internal controls will prevent errors. So this one is straight out of the book, that the cost of establishing control should not exceed their expected benefits. That's what reasonable assurance means in this context. Which of the following statements is correct? Internal auditors are company employees who evaluate the effectiveness of the company's system of internal control on a continuous basis. That's true. External auditors are company employees. Nope, they're not usually company employees. C, the public accountants conducting annual audits are responsible for continuous evaluations of the company's. Nope, those are the external auditors, and they don't do a continuous basis. They do a regular or a periodic basis. And only large companies employ internal auditors utilize system of internal controls. That's not true, so it must be A. For what purpose are physical controls used in a business? To enhance the accuracy and reliability of accounting records and to safeguard its assets, to prevent fraud, to produce accurate financial statements, or to deter employee dishonesty. Physical controls. And the answer to that one's another one right out of the book. A, to enhance the accuracy and reliability of accounting and to safeguard the assets. All right, number 15, which of the following is not one of the principles of internal control? Establishment of responsibility, documentation procedures, financial performance measures, or independent internal verification. So establishment of responsibility is one of them. Documentation procedures is one. Independent internal verification is one. So financial performance measures, while they're valuable, are not part of our internal control. Number 16, which of the following is not a physical control? Safes and vaults to store cash, independent bank reconciliations, locked warehouses for inventories, or bank safety deposit boxes. So again, independent bank reconciliations are not a physical control. 17, which of the following was not a result of the Sarbanes-Oxley Act? Companies must file financial statements with the Internal Revenue Service. All publicly traded companies must maintain adequate internal controls. The Public Company Accounting Oversight Board was created to establish auditing standards, and corporate executives and board of directors must ensure that controls are reliable and effective, and they can be fined or imprisoned for failure to do so. This one's a little tricky because they all sound good, but the answer is A. Companies must file financial statements with the IRS. That's not true. I mean, in as much as they've always had to. When you file a return, it looks a lot like an income statement, although not exactly the same. And certain businesses already had to do a balance sheet. In essence, they had to disclose assets and liabilities. So that was not a creation of Sarbanes-Oxley, and in no case I guess, is there a specific filing of financial statements with the IRS. More of those are filed with the SEC, the Securities and Exchange Commission, for publicly traded companies. All right, 18. Which of the following control activities is relevant when a company uses a computerized rather than a manual accounting system? Establishment of responsibilities, segregation of duties, independent internal verification, or all of the above are correct. Of course, it doesn't change just because we're using computerized accounting. We still need to follow all of the rules, the basic rules of internal control. 19, Hanley Inc. permits only designated personnel such as cashiers to handle cash receipts. What principles are being applied? Segregation of duties, establishment of responsibility, independent internal verification, or rotation of employees. And of course, this should be establishment of responsibilities, right? They're listing out whose job it is to handle cash. So that's who handles cash. All right, Aptera Construction Supplies has a cashier who is also an accounts receivable clerk for the company. Which internal control principle is violated? So this one is going to be, it's not rotating employee duties, it's not documenting. So it's either establishment of responsibility or segregation of duties. And I'd say we're violating segregation of duties because in essence what's happening here is you have a person who's bringing in cash, but then they're also dealing with the accounts receivable, which would be the record keeping of the cash. And so that's going to cause a problem. You can make an argument for establishment of responsibility because the person now has two responsibilities, but I think C is our best answer. 21, which internal control principle is most important in a control system for handling cash receipts? Most important is always a dangerous way of putting things. The word most is open to interpretation, of course. I don't think this is a very obvious one for that reason, because we can argue about what most means. I think physical controls and segregation of duty are the two strongest contenders for the answer to this question, because being able to keep the money locked up, so to speak, or making sure that you have another person to check the person who's handling the money. So I'm not sure what they mean by most. I'm going to guess physical controls, and I guess we'll see when we check it if it likes that answer. Which of the following is not a control procedure used for over-the-counter receipts? Use of a cash register where the amount rung up is clearly visible to the customer. That's good. Pre-numbered checks are used to buy supplies. That's good. Providing the customer with an itemized receipt. That's good as well. The cash register tape is locked in the register and only a supervisor can access it. That's also good. So which one is not a control procedure used for over-the-counter receipts? And I would guess B, where we're buying supplies. That doesn't fit with the rest, which are all over-the-counter relationships with customers. Not that they're not good, but that the nature of the question was asking about over-the-counter transactions. 23, all disbursements, even incidental amounts, must be paid by check. So this is false. In a perfect world, maybe you would do that, except it wouldn't really be perfect because it would be costly. It makes sense usually to have a small amount of petty cash where you can pay for really trivial or small disbursements using petty cash. 24, which of the following is an effective internal control over cash disbursements? The use of pre-numbered checks, the storage of blank checks in a secure place, the separation of authorization of checks and the actual writing of the checks, or D, all of the above. We're going to go with D. 25, an authorization form which is prepared for each expenditure in most medium and large organizations is, let's see, an invoice, a voucher, a receiving report, or a purchase order. And we call that a purchase order. We have that where I work. I have to request it, then my boss approves it, and then they create a purchase order, and that tells the supplier that I'm buying from that the company has authorized my purchase. 26, deposits in transit are added to the cash balance per books on the bank reconciliation. So a deposit in transit is something that we have already recorded in our books. And then when we get our bank statement, we realize the deposit has not been included in the bank account yet. So we would add that to the cash balance per the bank statement. So this is false. 27, for which item below might a bank issue a credit memorandum to a depositor's account? An Nsf check? No. Interest earned? Yes. Monthly service charges? No. Outstanding checks? No. So interest earned, you get your bank account and you see that you have more money than you thought you did. That's what a credit memorandum is. It's the bank adding money to your account, and they do that for interest earned is one reason. Which of the following might a bank issue a debit memorandum? So here you get your statement and it has less money than you thought you had. So that wouldn't be interest earned, it wouldn't be collection, it wouldn't be a deposit in transit, but it might be a monthly service charge. That would be a debit memorandum where they've charged you for something. 29. Springer Company listed outstanding checks totaling $4,500 on its September bank reconciliation. In October, the company issued checks totaling $45,700. The October bank statement shows that checks totaling $39,800 cleared the bank. In addition, a check from one of Springer's customers in the amount of $500 was returned as NSF. The outstanding checks on the October bank reconciliation should total. All right, so this is something that I don't know about you guys, but I can't just do this in my head. So I'm getting a little piece of scratch paper here, and I'm going to work this out. All right, so I've got my outstanding checks as of let's see, September, or my September statement, 4,500. And then in October, they issued checks totaling 45,700, which means that including September and October, the total amount outstanding is 50,200. If the amount that cleared the bank is 39,800, and the amount still outstanding will equal the amount, the total amount that was outstanding minus any that cleared, or $10,400. This part about a check bouncing from a customer, that's just obfuscating information because this is about the checks we've written. Okay, checks we receive from customers aren't part of our outstanding checks, whether they bounced or not. So it should be 10,400. All right, number 30, Jones Company collected the following information to prepare its May bank reconciliation. Let's see, cash balance per the books, 5,300. Anyway, you can see all that information there. How much is the adjusted cash balance per the books on May 31st? Okay, well, again, I'm going to bring up my little Excel spreadsheet and just use it as scratch paper, so to speak. So we had our cash balance per books on May 31st, which is 5,300. Whoops. And then we have to figure out which things are going to adjust our book. So remember, deposits in transit, those were already in our book. A deposit in transit means we go to the bank, we deposit the money, we record it in our book, and we assume it's all there. But when we get our bank statement, we realize we must have deposited it too close to the end of the month, and so that money is not showing up yet on the bank statement. We don't make any adjustment to our books for that. We make an adjustment to our statement balance for that. So that's not going to affect this. Notes receivable with interest collected by the bank. So here, when we get our statement, we realize that the bank has collected some money for us, $580. So that will be a positive adjustment to the cash per our books. Bank service charges. So we get our statement, we realize the bank has charged us a service fee of $30. That'll be a negative adjustment to our books. Outstanding checks, those are not an adjustment to our books. Those are an adjustment to our bank statement. Again, this would be we wrote a check, we recorded it in our book, assumed it was cleared the bank, but when we get our statement, we realize it hasn't yet cleared the bank. Maybe the customer held the check or whatever. So that won't be an adjustment to our book, but to our bank balance. And then the Nsf check. So when we find out that we get our bank statement and realize that the check is non-sufficient funds, and I'm assuming that means it's a check we received from a customer. Remember, when we received it, we would have increased our bank account by 150, our book account. So now we have to take that 150 back off when we realize we didn't get paid the 150 we thought we got paid. So our adjusted cash balance will be the sum of all these accounts. 5,700. Hopefully that's an option. It is. That's good. 31, the Barker Company collected the following information to prepare the November bank reconciliation. How much is the cash balance per the book prior to preparing the reconciliation? Okay, so let's see how they want us to figure this one out. So this one is a little different than the last one, because the last one gave us the cash balance per the books, but this one doesn't. This one gives us the cash balance per the bank. So now we have to kind of work our way backward. 21,000. Okay. So let's see, our note receivable plus interest collected. Well, so here's what they want us to do. Let's make our adjustments to our bank and we'll get the adjusted balance. So let's just look at each of these: note receivable, and then we'll have our book balance. Yeah, they're trying to make this one a little tougher for us. And that's our question mark. We don't know what that one is. But now we can make our adjustments. So we can say the notes receivable plus interest collected. So that's going to be an adjustment to the book balance. So we're going to call it note receivable collection, which is $9,000. It's a positive adjustment. Again, that means we got our statement and found out they collected on a note for us, which I'm sure we knew they were going to do, but we weren't. You can't ever be sure until you get your statement. Outstanding checks of $6,000. So that's going to be an adjustment to the bank balance. Remember, these are checks that we've written and we've put into our book, but they have not yet shown up on the bank statement, so that'll be a negative adjustment. Deposit in transit. This is deposits we made that we recorded in our book already, but we have not shown up on our bank statement, so we will add them to our bank statement. Bank service charge of $85. This would be a negative. Found out the bank charged us. And then an Nsf check, and again, the assumption is that they mean a customer's check. Someone paid us a check and that check bounced. So that will be an adjustment to our book. All right, so now we'll have our adjusted cash balance, which will be the sum of all these, so 20,400. And our adjusted balance should be the same in either case. So now that we know our adjusted cash balance, we should be able to solve this by saying the cash balance per the book plus the note receivable minus the bank service charge minus the Nsf check equals the adjusted cash balance. Or we could say the adjusted cash balance let's see. Trying to think of the best way to do this. That should do it. So our cash balance per the book should be $13,585. Now is the moment of truth. Let's grade this because a couple of these were squirrely. So we'll see how we did. It says I got 94%. So let's see which ones I missed. Did good, all the way down until number 21. Which internal control principle is most important? And they're saying I put physical controls, but the correct answer was segregation of duties. I think I said as I was doing that I could make an argument for segregation of duties, so apparently that's the one they like, but I hate questions where it says most. All right, 25, an authorization form which is prepared for each expenditure in most medium and large organizations. Is it okay, I put purchase order, they're saying is a voucher. Okay. I'll say agree to disagree. I don't know what else to say. We call them purchase orders where I work. They want to use the term voucher. And that's it. I know that's frustrating when you get a test question like that where it really feels like it's semantics more than it is about what's right or wrong. And I can't always control those. Anyway, so that's it for Chapter 7, self-test. As always, please contact me if I can help you in any way.